The end of market seasonality as we know it. So September statistically, with the highest probability is usually not a positive month. And of course, we finished that up in a large way. So almost 300% more than the historical average. I'm probably being very conservative in that estimate. And here we are, we find ourselves in October at the time of this recording, Tuesday, October 7th, and we're in the London time zone right now. The three reasons that I'm looking at for price that's not really following the script of conventional seasonality. Enough with the preamble. Let's get to the charts. Monthly candle chart. This is October here. And again, we're Tuesday, London session. So notice how the previous month, this large green candle up, that defied all of the seasonality. And here we are 7 days in, calendar days, not trading days, into October. And this little blue line is the 3 EMA. So I don't trade off the monthly candle, but I just want to focus here on relentless drive up, and you really can't call a top here. So let's go to the next lower time frame. Okay, the daily chart. So what I really want to focus on the daily chart is less is more. I can do more with less. So we're talking less as in size of the trades because this is a one-way market. We've established that. These two dotted lines right here, that started the week off as a new week gap, new week open gap to be specific. And you can see the levels there. And then the red line is the 9 EMA. So a shallow retracement, not some kind of crash or bottom. We might be attracted in this week into these levels. So 67.50 on the 9 EMA, and these two levels are pretty much within striking distance. Again, the 3 EMA in blue. But as a ICT student, I'm looking at the wicks here, and I put gradient levels on this wick right here 3 days ago and this long wick right here. So that helps me understand the levels above where we might retrace back up. And of course, with the red lines here, all-time highs already have happened. We had a high a day, previous day, Monday, almost reaching all-time highs. Were hit on already October last Friday. So these two red lines right here. So my line in the sand comes in right here with this purple line, 67.80. If we cross that and we're above it, we definitely could just keep going up here into the 6,800s. Below it, again, I'm looking at for new week open gap, the red. And if we really want to see a retracement, not any kind of breakage of trend, but just down here, this blue rectangle, this would be the measurement and gradient of the wick here. So that wraps up a very short video on the daily, my analysis, and why I'm really not fighting this tape. It's not a two-way tape. It's a relentless trend up, and the seasonality is basically eliminated for 2025. Thank you so much for watching. If you like to have more of this content more consistently published, appreciate you subscribing and liking. Aloha, take care, bye.